In this video, we're going to look at what happened to the crypto markets. Stay tuned. Hey traders, a very warm welcome to you. Okay, so what happened to the crypto markets? We all know there was a big explosion in crypto markets. A lot of cryptocurrencies made a lot of value, increased a lot of value, and they came down pretty hard. So what actually happened to cause this? Now, I just want to say this. This video is not about the benefits or not of a particular cryptocurrency, whether it should be a currency, whether it should be used as a store of value, whatever. That is irrelevant in this video. I am looking at it purely from a trader's perspective. So this kind of concept applies whether we're looking at a crypto market, whether we're looking at a small cap stock, whatever. It's the same kind of thing. Ultimately, any price or market moves based on supply and demand. If you've watched my videos before, you'll know that I'm a big believer in looking at any market in that way or through that lens. Supply, demand. A lot of demand coming in, price is going to go up. A lot of supply coming in, price is going to go down. Pretty simplified, but with lots of different permutations of those that causes the market up and down, ebbs and flows, trends and ranges and all that kind of stuff. So what happened to a lot of the cryptocurrencies? Well, let's just look at them as a kind of broad thing, not just Bitcoin or Ethereum or Ripple, whatever it may be. Let's look at them broadly. The fact of the matter is, they were chugging along, not a lot of attention. And let's just fast forward to the kind of exponential explosion we had in those markets. What actually happened there? Let's dissect and see who got involved in the market. So all the early adopters, forget about that for now. Good, they've done nicely out of it. But let's just look at this kind of point here where things just started exploding. The media started getting hold of Bitcoin. Social media as well allowed the cryptocurrency thing to spread. It spread. Everyone's kind of learning about it. And when it's in this phase here, in fact, you know what? Let's put a clear, bigger chart on here because this is important to understand because ultimately, guys, this happens time and time again. It doesn't mean it's just human nature. So, we had this little push, started to go. When things start to go, no one's that interested, okay? A few people are in it, a few people have made money. All these early adopters are kind of saying, I've made loads of money out of it. Or they're generally not because they're early adopters, they're interested in the actual technology itself. But we get this scenario where as we start to go higher and higher and higher, it starts to bring in new, fresh demand. And this fresh demand comes from traders who are kind of involved in the space. And then when that's exhausted and the traders are involved, we go to the next phase of people who want to get involved. And that might be, kind of investors who are just learning about it, not afraid to take a bit of risk. Then we get to the next phase of people. So there's phase one, there's phase two. We get to the next phase of people. And now we start talking about cab drivers, hairdressers, people on the street who hear about it. And you kind of get another phase of people, it goes down the tier. And these people, and if you can kind of extrapolate with that, as we start to really go exponential, these people don't care about the cryptocurrency. They don't care about the story. They're not early adopters. They are purely from this kind of section onwards, if you like, maybe it could be below that or whatever, but you get the point. This section onwards are people who are purely in it to make money. So their motivations are completely different. Now, obviously, people in it from here are in it to make money, but these guys are in it to make quick money. They believe it's going up quickly. They've heard stories from other people in their industry, other peers that have said to them, hey, you know what? This thing's gone up. I've stuck £1,000 in. It's now made two. I've put £10,000 in. Every day I look at it, it's going up by 1,000. I can't lose. And these guys have zero experience of risk. They are fresh people. Us traders and investors have some kind of concept of risk. They've gone in, they've assessed the risk of it, they've allocated capital to it, fine. But this kind of latter half of the push, if you like, in all these cryptos, is fresh people coming in with a different approach to it. A gambler's mentality on the whole, I'm generalizing here, a gambler's mentality looking forward just to make money out of it. And there's a lot of the classic FOMO. They're seeing all their peers saying, hey, I've made loads of money on this. The Uber driver's making money. This guy's making money. Cool, fine, all very well, but there's no assessment of the risk. So, of course, we get to a scenario where literally the last person who's heard about Bitcoin is finally, and he can't take it anymore. He's in because it just keeps going up. He's been thinking about it. It's gone from 10, 15, 19, whatever it may be, and they just can't bear it anymore. They have to get in. So now everybody who is in is in. The word has spread so much in a short time that we've had that buy. Now, it's not to say there's not more buyers out there, but the investors are thinking, hey, this is really excessive now. I'm not going to be chasing this. If I believe in it long term, let's just let this settle. Same as the traders, same as everyone else, people taking money off the table. We've pushed because supply has not been able to match the demand coming from this fresh demand from fresh blood, if you like. I don't want to use that term, but you get the idea. And so we hear stories of people over leveraging, people using credit cards, people doing this, people doing that. And the reason they're doing that is because all they have seen is this straight line up. They've not seen any real movement. They've not watched other markets because they're not involved in the markets. Why should they be? They've got different professions. All they've seen is Bitcoin going up and then they're in. So they have no concept of risk. Now, for the average person who sticks in 5 grand or whatever it may be, a grand, doesn't matter on the number, when that starts to pull back, then it triggers all the emotions inside them that we know as traders get triggered. And then we work actively as traders to manage that kind of stuff, but they're not used to it. They see the money there, they see it going down, they see it, oh, I've lost 500 quid in a day, hang on, that's not meant to happen. I've made this money. Or maybe they've been a little bit earlier and they've made doubled and now they're seeing coming back. All these people are very, very emotionally sensitive to adverse movements in their portfolio. In this case, cryptocurrencies, whatever cryptocurrency that may be. So we don't have any fresh buyers, so we don't have any more demand coming in, or maybe the demand, we're not saying it's completely cut off, but that really starts to shrink. Now all of a sudden, this thing flips to massive supply because a lot of these people who bought in here are saying, I don't want to be involved in this. I'm losing money. This is money. I didn't even think about losing money. All I saw was this thing going up day after day after day. I'm going to pile in on it. And now they're losing money. They're panicking. They're coming out. Or let's say some of them are adding. They're just getting themselves in the trap. And really it's the supply demand has just shifted so much to now shaking out all of these people and just leaving the kind of core people who believe in the cryptocurrencies from here onwards. They're kind of happy to sit through all this kind of stuff because for them it's an investment for the long term. So this is nothing anywhere related to cryptocurrency in terms of, has it got any long-term value, all this kind of stuff. That's a complete separate argument to me. The crypto boom was taken over by pure gamblers, pure speculators who were saying, hey, you know what, I'm going to stick all my money in it. I'm going to ride it for a couple of weeks. I'm going to take the money out because it's been a one-way street so far. And of course, when everybody's doing that and there's nobody else to buy at the top, no one else to fuel it, the last cab driver's in, nothing against cab drivers obviously, but the last whoever who's not involved in the markets is the point where you get the tip, and then the pressure comes on them very, very quickly because they're not expecting that to happen. So they're dumping, and of course the bigger players are waiting for this because they don't care about this. Yes, maybe it's nice for them to see that going from 1 to 19,000, whatever the number may be, but that doesn't help the cause of, hey, it's going to be taken over as a currency, a store of wealth. They've got a longer vision for this. They've got a longer vision and a longer kind of thesis on the trade or on the deal, on the investment. So this happens not only in cryptos, guys, it happens in small caps. It's that pinnacle point where the last man or woman is in, there's no other demand coming, and all you get is now supply. Because that's purely what is driving this, in particular crypto. It's purely what's driving the crypto. We've got stories and whatever. We can't value it as such. There's no fundamental valuation there. It's purely based on supply demand. News flows causing this, news flows causing that. How's people's perception of it? And of course, when the majority of people, i.e. these 3 to 4, suddenly have a perception of, hey, this is going to damage me, it just causes a massive shift in the supply-demand imbalance, and we get that drive down. And we had that with a broad array of cryptos. We have that with a lot of kind of small cap stocks that are based on stories, and there's no underlying support from institutions, hedge funds, or just general people accumulating with mutual funds or whatever, like you would with a larger stock. Small cap stocks that are really exponential moves that go crazy based on news, same kind of thing. Loads of demand coming in. This will be the next biggest thing. The last few people in are literally looking for short-term gains. When it doesn't happen, you know they're going to come out. You know that's their pressure point. They're not in for the long term. They can't sit through a 20% haircut, 30% haircut, 10% haircut even. And that's exactly what happened with the crypto market. So keep an eye out for this with every single thing that you trade. You're probably not going to get it with, okay, saying that, we did get kind of a similar thing obviously with the tech boom in 1999, but you're generally not going to get it with the thicker kind of stocks, that have some kind of broad underlying value to them, because this is not normally, I'll probably put this video out there and you guys are watching it and saying actually it happened in this, but normally normal situations you won't get that exponential rise because there's always going to be some sellers pushing it down. You're always going to have some people taking some profits, short sellers getting involved in it, just general kind of supply demand, slight imbalances, slight movements one way or another. Maybe they'll be continuous, but they won't be so extreme as they are the crypto markets that can only go really once you get the final one, spring back the other way. So keep an eye for that. That's kind of what's happening in the crypto markets, guys. It's something to be aware of. Can you get involved in it on both sides? Of course you can, but as long as you're self-aware and you know who the participants are, who you're trading against, what their goals are for it, then you can start to maybe think one step ahead of them and think, okay, well, this might be vulnerable, or it's not vulnerable, or this pull down now is purely based on just getting out the gamblers, whatever. You can start to think and play the game as a game of chess as opposed to just looking for those short-term gains. All right, guys, see you next one. Take care. Bye-bye.